All right, good night everyone, and welcome to our first quarterly annual Sunday Morning Kickers quarterly financial literacy and awareness program. All right, before we kick anything off, we normally like to give a word of thanks to God. So if we could all just briefly close our eyes and let's say a quick word. Most kind and eternal Father, as we gather here together to talk about financial wellness and financial health, may this conversation be educational to all of our minds and our hearts, and may we be able to apply them in our livelihoods and our life to help us be better people and better families. These are the unmentionable mercies I do ask, in Jesus' name I pray. Amen. All right, well, good night everyone. Thank you guys for coming out, and hopefully we can see you guys when we continue this program. The whole point of this program is to help grow our community, help us share some of the knowledge that we have. There's a lot of wealth and information that we have among ourselves that if we do share, we can actually help build a greater community within, our unique race and community itself. So we're here to talk about financial wealth, which includes a range of topics from banking to investment to credit to entrepreneurship, from forming a corporation, taxes and how it applies to the corporation if that's what you want to do, real estate, which is fundamental, and information technology and how that is linked with finance. All right. Page down.
No, it's arrow.
I am. Next, just hit next page. There we go. What is financial literacy? Okay, financial literacy is the ability to understand and use various financial skills, including personal financial management, budgeting, and investing. Why is financial literacy important? Because, in short, it equips us with the knowledge and skills we need to manage money effectively. Without it, our financial decisions and actions we take or don't take lack a solid foundation for success. Fundamentals of financial growth include, but not limited to, banking, saving, checking, real estate, home ownership, credit, in America specifically, that's super important. Insurance. I know in a lot of cases when we use the word insurance, people get a little frightened and people feel like insurances most of the time are just there to take your money and not do anything. But without insurance, a lot of things would go awry. All right? Insurance gives you risk management, specifically an investment. If you go to take out a car, the loan office or the bankers are not going to let you leave that parking lot without insurance, because that's them managing the risk of giving you money. That's why insurance is important. So we want to talk about insurance, and we're uniquely equipped to talk about insurance because we're actually standing into an insurance office right now. And Jennifer Estevin, I'm sorry, did I say Estevin? Is that your last name?
Metellus.
Jennifer Metellus, which is Feder Estevin's daughter, if you guys didn't know, will be talking to us a little bit more about insurance, and I'll introduce her again when it's her time. Investment, for those who want to invest. We'll talk a little bit more about investment today, but the investment conversation will be an ongoing conversation over the year, because that's a much deeper and broader conversation. entrepreneurship for those who want to start their own company. I know Tracy has his own business running right now. I know you're interested because you do some promotions and so on, and you want to do your own business. I know you do even though you work for somebody, you still take jobs on the side. So that's entrepreneurship. The number one thing, the most important asset you have in your life is time. It's your time, right? There's nothing more valuable than your time. And when we work for someone, what we're doing is we're giving them our time. And what they're doing when they give you a paycheck is they're valuing your time. Entrepreneurs decide that we don't want people to value our time. We're going to put the value on our time. So you're not going to limit me to what I can earn. I'm limited to what I can earn, right? So that's the reason behind entrepreneurship. And if you decide to be an entrepreneur, you want to start your own business, we will be talking about how to form a corporation, what type of corporation makes sense for you, the type of business you're going into, whether it's going to be an S Corp or a C corporation or an LLC or a non-profit corporation. Sunday Morning Kickers, for instance, is a non-profit organization where, you know, under the 501c3 banner, which means that we're exempt from a lot of taxes. As a matter of fact, from, if I should say, all taxes, right? So we can operate within that sphere without having to pay tax and worry. But we'll be talking about tax rules and the advantages that we can take with these tax rules. And then last but not least, we'll talk about information technology and how it relates to finance. A lot of business today are going digital. A lot of people are not doing paper money anymore. Digital currency are taking over. Online banking is taking over. You know, as you know, you can use your iPhone to pay for stuff through your wallet or Google Pay or you know, or Apple. You know, so it's where everything is going. So it makes sense for us to get ourselves equipped and get the knowledge that we need to be able to function in this new sphere. So with that said, without further ado, the first thing we want to talk about on the list of things, and a very important thing, is credit. And we're going to have Feder Estevan present on the topic of credit. And it's like that.
Yes. Well, while I get my system to set up, I just want to introduce myself. As you guys know me as African. That's my habit names or giggy names, but my legal names is Jean Fedor Estevan. I go by Fedor. Fedor is my middle name. I don't know Jean, so don't call me Jeans. Okay? But so a lot of you guys on Sunday Morning Kicker I do business with, but I try to keep that confidential and personal. I don't go around tell anybody what I do for who I do. I just go and take care of business. I've been on credit, working on credit over 30 plus years. My wife used to run a bank, and fortunately I was able to partner with her and steal some of the knowledge. As you know, what bank does, everything that we do with credit. Even though some people may not feel they need credit or they want credit, but here in America, without credit, you're not really taking advantage of benefits, opportunity that can come to you. One of the reasons is because even though if you have the cash, not necessarily you want to use the cash, especially when you have family, credit is important, very, very important. I have something I put together. Over my 35 years that I worked on credit,
You bringing up the file?
Yeah, I'm gonna try to. I like it already. Over my 35 years plus that I work, I spent over 10 years working as a mortgage breaker. I was a realtor. I was a finance manager, finance director, leasing manager, leasing director. My 30 plus 5 years is mainly working credit. So I do understand what credit means for a lot of people. And in fact, I was able to, working over the years, credit is so important, but there are things that we don't know in the black community, how the bank look at a file, how the bank throw a red flag onto your names. Years ago, I was able to work with some major bank to able to get a certain people approved. When the applications go to the bank, they look at the name, they automatically deny you.
By the name.
Just by the name. You on the other side, you don't know that. But with an influence, somebody else behind the phone can change that. But why? Why? If Peter come to me, he does an applications, he wants to buy a car, he wants to buy a house, I submit the applications. If it's a mortgage, the underwriter look at the name, he don't want to approve that file, he don't even have to look at to the file, he turn it down. Once you look at the names, that's what a lot of us dealt with over the years. But some of us, when we come inside, we're able to sit around the table, we're able to know what are they doing. Like I said, my wife was a banker, she was running the bank, so I was able to buy some of these brain that she has. She used to tell me, this is what you do, this is how you do, this is what you do. For one of the major company and financial institute, okay? I had a computer. My wife taught me how to go on that computer, regardless the name, to make sure that loan is approved. To make sure that loan is approved. So those are the small details that we on the other side those are the small part that we on the other side don't know. Don't know because we're at the mercy of the bank. Certain things that we don't know, and we're waiting at the mercy of the bank to give us the details, what we need to. So just to give you guys the insight on terms of the credit, what we're dealing with. But today with technology, there are a lot of things that makes it's more difference on the bank not to be able to do that anymore. And besides, there are so many of us now that able to sit at the table, knowing a certain things they no longer can do. But it doesn't mean that they can't find a way to go around it. Over my 35 years, I fought a lot. I have improved a lot of people's credit. I have people that come to buy a car that couldn't buy the spare tire on the car. But when they leave not only with the car, and I put them on a program 6 months later, they have no credit, all of a sudden they have credit, all of a sudden they have credit card, all of a sudden they're able financially to be able to do things like everybody does. But those are the things that we in the community, we need to know, acknowledge ourselves to understand what we are dealing with. And this this conference that we're having is very helpful, is very educated. We can share our mind, we can share a certain idea. Each individual is a professional on their own fashions. So the more that we can share, the better that we can be. So I don't want to take too much of you guys' time. I just want to put something out there, and it will speak for itself. There is an 8 part of it, but over the course of the year, we will do one at a time so we can share all time so everybody can have and participate, okay?
It can seriously affect how much you end up paying. For example, take these two. They both want to finance the same $1,000 oven. This gal has good credit, so the store gives her a 10% APR or annual percentage rate, which means she'll pay 10% interest on the oven per year until it's paid off. 10% on $1,000 is $100, bringing her total to $1,100 for the year. She sets up a 1-year plan, pays $91.67 a month, and she's done. This guy, on the other hand, doesn't have good credit, so the store gives him a 25% APR. That's an extra $250 per year added to the oven. He can pay it off in 1 year with a monthly payment of $104.17, or 2 years with a monthly payment of $62.50. He goes with the lower payment because he thinks he's saving money, but in the end, he actually pays more. Why? Because it's a 25% interest rate per year, so he ends up paying an extra $250 on the oven the first year and an extra $250 the second year, bringing his grand total to $1,500. $1,500! That's $400 more than she paid for the same oven, and $250 more than he would have paid if he went with a 1-year plan. So, what's the lesson? 1, credit affects your interest rate, and your interest rates can seriously impact your total cost. The good news is, all lenders are required to show you the interest rate and even the total amount to repay in some cases before you're approved. So do your research first and find the best one. And 2, don't be tempted by low monthly payments. Instead, look at the interest rate, the amount you're borrowing, and how long it will take you to pay it off, because that's where you'll find the true cost of credit.
That's the first part. So, we have many other guys that need to share some of the opinions. So each meeting, I will select a certain part of that to give us a little bit more detail, more sense how credit is very important. All right?
Yeah, I just want to add, do not feel like you have to wait for the next meeting. If you have a specific interest and you have something to do with, you can contact Feder directly, and he can go through that with you one-on-one and give you the entire show if that's what you want. But for those folks that's on the Zoom chat and just tuning in, just know that that will be available as we keep this thing ongoing. So the next presenter, as you noticed when you were walking through the door here, there was a whole list of things on that door to say what this office does. I've known Jennifer for quite some time now. She did all my business taxes, all the vehicles that my company own, all the vehicles that I own. She's the one that insures them. I think at one point you could run this office just off of my business alone. But she takes good care of me. If I call her, it doesn't matter when. I was at the car dealership the other day, and I call her up. I was buying a car in the morning, and I said, Jennifer, I need insurance. And she got me the insurance, but then I said, please don't leave the office because I'm headed to Palm Beach to buy another car and I'm going to need insurance again. So she said she made sure she took all the information home with her, so when I called her from the other place, she was available to me. So she was very accommodating, and she's always been accommodating, and she's very good at what she does. But she's just not just an insurance agent. There's a slew of things that she covers, including taxes, insurances. She can talk to you about corporation and how to set up your corporation. And I'm gonna let her tell you about all the other things that she does. But without any further ado, Jennifer.
Hello guys, my name is Jennifer Metellus. I've been an entrepreneur now. This is year number, wow, I lost count. I'm going on year 11. Believe it or not, I was supposed to be an FBI agent. If you don't believe me, my wall has my criminal justice degree. I took a turn and went and got my master's in business and accounting. Yes, I did have a desire to kick down doors. I still watch SWAT and be like, damn.
Pause.
But
can you pause? Zoom in. Yeah.
Zoom ended? Alright, so I have to join in again.
Excuse me. Pass that phone for me.
So just tell everybody to join right in again. If you guys can just take the flyers and pass those around.
Alright, I was just going to.
Hold up, music.
Oh, when it joined,
Yeah, when you're joining, it doesn't mute you. So if you're joining, you gotta mute.
Everybody mute?
No?
No, you?
That's me? No. Oh, that was David. Okay. I think you should just go ahead. Yeah.
Alright, so, as I was saying, so I got into the entrepreneur world about 11 years ago. Again, my career took a change. I had the desire of going into criminal justice. Life took a change. I have no regrets. I was a director at 3 different universities. I was director of admissions at 3 different universities. Walked away about 6 years ago to go into full-time entrepreneurship. So talking about entrepreneurship, I started my business 11 years ago. I started my business. I depleted my entire savings to start my business. My entire savings. I told my dad after I did it though, because he was gonna kill me. I took what was supposed to be my down payment from my house, And I said, forget it, I'm gonna open up a business, I'll figure out the rest later. And that's what I did. 11 years later, here I am, full-time entrepreneur, 2 kids, and I have no regrets. Depleted my entire 401k, started over of course, but I was young. So I said, at 25, 26, I'm not thinking about retiring. I can start my 401k all over again. And I did it. Didn't have anything, depleted my savings account, depleted my 401k. You know, I didn't have, you know, like the white people who have inheritance, didn't have all of that. And I went full-fledged. It was scary, but I did it. And I have no regrets. Made my money all over again. Now here I am 11 years later, and I started my retirement all over again. I've made my money over 10 times over, and I did it. So talking about entrepreneurship, you can do it. You don't have to have a whole heap of money to start your business. You don't have to have perfect credit to do it. There's ways that you can do it. Now, do you have to have certain things in order? Yes. Do you have to have a plan? Yes. Does it have to make sense? Yes. So it can be done with the right plan, with the right mindset. It can be done. Okay. Now, going into what type of business structure you should have. That's something that you want to talk to. Yes.
Tell everybody just that when they log in, they need to mute. Just say that when you're talking, because it doesn't mute.
I don't know if they had a question or. Did someone have a question?
I just think they're not unmuted.
It just wasn't it. Go ahead.
Okay. As far as what type of business structure you should have, that's a question that you should sit down with someone who has accounting experience. There's a difference between someone who does taxes, and there's a difference between someone who has accounting experience or an attorney, a tax attorney who knows what they're talking about. Someone who just does taxes and who doesn't really understand formation of a corporation, formation, because they're understanding how you're going to be taxed is very important. How a corporation is taxed versus how an LLC is taxed is 2 different things. So you need to talk to someone who knows what they're talking about. A corporation is taxed at 21%. Versus someone who's a single member LLC who has self-employment tax at 15.3%. If you don't understand that and you're talking to someone who just does taxes that plugs in numbers, you're gonna be in big trouble, and you're gonna be upset come tax time. So you need to understand how to structure your business properly, because you don't want to just be like, oh yeah, just LLC. I hear a bunch of people say, yeah, I was told to just form an LLC so I can have all these write-offs. So I can deduct all this stuff. But when you go and deduct all this stuff and you go see Dean to buy a house, right? And Dean, you like, yeah, Dean, I want to buy a house. And you got all these write-offs. And Dean goes to his underwriter to go to this underwriter to get you pre-approved or pre-qualified for a house. And you done wrote off all this stuff. Dean gonna tell you next. Because I just heard Dean say he only want to deal with people who ready to buy a house. So you need to know, you need to talk to people who know what they're talking about. Write-offs don't work if you're trying to buy a house. Because I'm not going to give a referral to Dean to someone who just want to write stuff off. That's a waste of his time, and that's a waste of my time. Okay, so you need to know what you're talking about. When people come talk and say, yeah, I'm not trying to pay Uncle Sam this year, but in the same breath you just told me you're trying to buy a house. Those 2 things don't go together. I don't want to pay Uncle Sam, but I also am trying to buy a house. Those 2 things don't go together. Either you're going to pay Uncle Sam, or you're going to live in this little apartment and pay $3,000 for your little 2-bedroom. Because that's what it's going to be. Okay, so understand, you can't go to some fly-by-night tax person who's not going to educate you and really help you understand where you need to be financially. Yes, nobody wants to pay Uncle Sam, but you also are not going to make the proper business moves that you need to make, or you're not going to progress in life, okay, financially, if you're trying to rob Peter and pay Paul all your life. It's just not going to work.
Mom is around the
Okay? Now, when you open a business, you gotta have certain insurances, okay? Because opening a business is, God forbid you get sued. You gotta make sure you have certain insurances in place, okay? I have to carry liability insurance. This building I'm in, I have to carry liability. God forbid one of y'all slip and fall in here. I have to make sure first of all, my landlord won't even let me sign a lease without having insurance. Not to mention, I have to carry errors and omission insurance. If I make a mistake on somebody's tax return, I have to carry certain insurances. If you guys sue my insurance, sue me for something. I have to carry certain insurances to back me up if I make a mistake. Okay, same thing for any business that you carry. The doctors, they have to carry medical malpractice. Same thing for you, whatever type of business you own, you have to carry certain insurance. Leaford talk about having that risk. When Leaford at that dealership, he held me down because he can't drive off that lot without the insurances. He don't care that I gotta pick the kids up. He like, hey, I'm gonna call you in an hour. I need that insurance because he can't drive that off the lot. Same thing. You can't run a business. God forbid somebody sue you or sue your company. You want to make sure you have those insurances in place. Because if not, your asset is gone. Your business, the money you make, those are assets. You gotta protect what's yours. Does that make sense?
Makes sense.
Mm-hmm.
Even though it's an additional expense, it's gonna hurt a whole lot more when you get that lawsuit, that courier coming and certified mail you, and now everything that's in that bank account, you have to give it up because you don't have the proper insurances in place. I'd rather pay Hiscox, Progressive, whoever it is, whatever premium I gotta pay every month, than to give up everything that I've worked so hard for. If you don't know what you need to do, if you don't understand certain things that you need to put in place for your business or how to get things organized, talk to someone who knows. If you have a plan, if you have something that you want to work on, or maybe you're not sure, you have questions, there are resources out there. He talked about credit. I have resources for both personal credit and business credit. If you feel like, hey, I want to have a business, but I'm not sure if I have the business credit, or I'm not sure if my personal credit is up to par, it's okay. There's resources for that, and we can help you with that. Okay? Any questions? So we talked about different formations of businesses. If you're not sure whether I should have a corporation, whether I should have an S corp, whether I should be an LLC, there's two different types of LLCs, single member, multi-member. Multi-member if it's more than one person. If it's you, another person, or you and a few other people. Okay? What are the advantages or disadvantages of having a multi-member LLC? How do we split that up when it comes to tax purposes?
I do have a question. Oh, go ahead.
Oh yeah, I was just gonna ask whether when you're starting that entrepreneurship journey, do you have resources that you can take advantage of to help you to get started?
As far as capital?
Capital, formation, stuff like that, all of those things.
I do help with helping you form. As far as capital goes, I can see if any of my resources help with startup capital. Did I tap on this? Is this what?
Yeah, I think turn to the Google thing. I think it's just TV.
Or you maybe
Yeah, you change the
Change the source, there you go.
there you go.
I have a resource right now that that helps with business credit and things like that. I can ask her if she helps with startup capital. Yeah, but she's definitely good with. She's definitely great with fixing credit and definitely great with business credit. I don't know if she helps with working capital. Yeah, I can ask for that though.
yeah. That was my question, because a lot of people confuse personal credit with business credit. And it's important to separate your personal credit from your business credit.
That is correct.
Because your business credit can actually ruin your personal credit and vice versa.
Correct.
So it's important to separate those things. So you say you do have a source for that.
Yes.
My new corporation, I need to start doing some business credit, you know.
Yeah, I can send you her
Okay, so we'll
information.
talk about that.
Mhm.
Okay. Alright, perfect.
Other questions? And again, guys, if I know sometimes people don't like to talk in group settings, so if you have questions after this group setting that you want to you prefer to talk one-on-one, feel free to give me a call and say, hey, I know you mentioned this in the meeting. I have a question about this. It's okay. If you're not comfortable saying anything right now and you want to kind of talk more privately about your personal situation and you want to, you know, you want a resource for something, that's okay. I totally understand. I'm more than willing to give whatever information I have and give you contact information for whatever it is that you need. If you are starting your journey, again, whatever resources I have, I am not selfish with my information. I have contacts. I have a lot of contacts. Like right now, I'm working with I have a contact in the Philippines right now that does all my graphics for very cheap. Yes, he actually does my flyers, he does all my posters, he does my website, very inexpensive. I would love to keep my work in the US, but I'm sorry. I like to keep my costs low. So yes, I'm not selfish with my resources, so whatever information you guys need, let me know. And if I don't know the answer to something and I have a contact or resource that does, I'm more than happy to share it with you guys. Even with the insurances, guys, if I can't get you a policy for something, I have counterparts in the insurance world that can give you a policy for something, I pass it on to them. We good?
Sounds good.
All right, guys.
Alright, thank you, Jennifer.
No problem.
Alright.
Check the sound, cause them not say something, so me can't hear clear. Check, see what going on.
After she spoke so clearly.
Yeah, she did. I don't know if it's the.
Anybody can, are you guys hearing us alright online? Yes?
I'm hearing you guys now. It's just that there's a ringing noise. I don't know if there's a feedback from something.
Oh, somebody's phone is, yeah, I can hear it too. I hear it when she was just talking a while ago. Check my phone again, see if my...
She has to talk.
Go ahead and talk again, let me hear you.
I'm sorry?
Yeah.
I'm
hearing
on
it.
mute.
I'm hearing something.
On mine. Right, left on mine, but I don't understand. Mine's on mute. Yeah, but I'm on mute. I don't understand.
No, but she's not on mute.
Yeah, but
So she, you
oh,
wanna
that's
hear
why I
her,
get
so
the
you gotta
feedback.
turn down her, you gotta turn on your phone.
Turn down your phone,
Yeah, it's all the way down.
Alright, mine wasn't turned all the way down.
So then
Alright,
how does
hopefully that's better now. Alright, so that was a great presentation, right? I want to thank Jennifer again. Jennifer is also the one hosting us here. This is Jennifer's office. For those who are online and don't know that, this is Jennifer's office. And if you look at the flyer, you'll see the address. So if you wanted to contact Jennifer, the office address is on there, and we'll share Jennifer's phone number with you guys. Just let me grab that, let me say it real quick. The phone number to the office is 954-727-1770. Okay, again, it's 954-727-1770.
The address?
The address is on the flyer, so yeah. Not this flyer, the flyer that we posted.
8441 Commercial Boulevard.
It's on the flyer.
Come on.
Yeah.
So the
No,
bottom
for
of
who's
that.
watching on Zoom.
8441 West Commercial Boulevard, Tamarack, Florida 33351. Alright, so with that said, so we talk about entrepreneurship, we talk about credit, we talk about insurances. A very fundamental part of financial literacy and financial standing in this world Are we off the thing again? Alright. In this world is real estate and home ownership. Alright? And we happen to have one of the gurus of the real estate world sitting with us.
$1 million club.
A man in the $1 million club. Once you see him, you see he look like $1 million bucks. My best friend for many, many years. Without further ado, Attorney Soman.
Thank you, sir.
I tell you so.
Oh, I hope I can deliver on that. I hope I can deliver on that entry. Dean, as everybody know me as Dean, so now we'll work with that. Good evening, ladies and gentlemen. Hopefully you guys can hear me clearly. As, a few people said they're not able to hear very clearly. So I'm going to talk as loud as I can and hopefully everything comes through. Did you have the slide for me? So I'm going to run through a few things here, just some basics and hopefully some basic knowledge. Hopefully everyone can learn something from here or get something educational from what I'm saying, what I'll be presenting. So just give us a second here, load up the slide. Should be
in your email.
Yeah, it should be in your email. Just go to your email. That's
my side.
So if you go to your email and just open it up from there. Alright, just give us 1 minute while we get everything up and running.
No, not that one. Go to the Google.
Yeah, click the button, the same arrow that you were clicking a second ago, all the way to the left.
This one?
Yeah, click it. And go into his email.
I am in his email.
No, not that one.
Not that one.
Not that one.
Not
Not
that.
that slide.
Yeah, click
Go
inbox.
back. Inbox. Go back, yeah. Go to Attorney.
Alright, so we'll go to the first one. I'm gonna leave it like that, huh?
Cheesy. Another pig.
This is the whole of them on in here and chasing another pig. I didn't even do a spell check, so hoping everything is spelled correctly.
Alright, let me share because this is not shared yet with the people online. Hold on.
Okay, so go back to one.
Escape.
Escape and then share it.
Hit escape, Jennifer. Then share. Hit escape. Yeah, there. Escape.
Yeah, sharing.
So yeah, share now, right?
Okay.
Yeah, it should be.
Yeah, but just go back a couple. Yeah.
You guys can see it now?
We good.
Yeah.
You good?
Can see it on the Zoom?
Yes. It's on the Zoom, yeah.
Alright,
Is he the last presented?
No,
can you see me?
One more?
Yeah.
Alright.
You're running.
Alright, so good evening again. My name is Dean. You guys know me as Aggie, Dean Soman, the realtor. So I'm going to give you guys a little bit of information here.
How long is he presenting for?
15 minutes, everybody.
Alright, so financial literacy, the importance of real estate. So real estate is very important if you're trying to establish financial equality and equity and things of that nature. An opportunity, yes sir. Thank you very much.
Go back on.
You should, yeah. My password.
Alright, so slide number 2. For those of you who have not owned a home or are looking to own a home in the future, near future, I'm going to start off with this slide. So first of all, like Federa had said, one of the important things here is credit. So if you're looking to purchase a home in the near future or even become a business owner, credit is very important in America. So that's one of the things you can do. So before you see a realtor or see a financial advisor, you can personally check your own credit. Okay, so a lot of people have Credit Karma, things of that nature. If you're signed up with banks now, a lot of banks are able to give you your credit score monthly. So there's no, most of the times there's no charge for that. And if you personally check your credit score does not go down or reduce by you checking your credit. If someone else checks your credit or another institution, your score normally gets dinged 20 to 30 points depending on if it's a hard check or a soft check. So you have the opportunity to do that. Also, you can get your credit score from the government. I think, Federa, you know the website? Do you remember what it is? What is it? Is it freeannualcreditreport.com?
Yes.
Alright, so that's a government website. So everyone here can get a free credit report from the government. It doesn't give you your score, but you get a full report of every credit card you've opened since you had it, what you closed. Depending on your credit history, it might be 5 pages, it might be 40 pages, but you are allowed to get one of those every year. Since the pandemic that they've had, you can actually get that every week if you wanted to. But normally it's free to you once a year. So you can see if somebody else has credit in your name, if there's things that they're under that you can dispute. So let's move on. So alright, so check your credit. The next thing is you want to obviously do what's called, a simple budget, how much you can afford, expenses, income, compare that. Find a real estate agent, hopefully that's myself. Then you would take yourself over to a loan officer, a bank, or a mortgage person to get pre-approved. You would then sit down with your realtor to start the home search, find a home, make an offer, negotiate on that home, schedule an inspection, get an appraisal on the home, so the value of the home. And then number 8 would be secure financing. So even though you get pre-approved here, secure financing, that is 2 different things. Meaning, secure financing is now when the loan officer goes to your credit with a fine-tooth comb to make sure all the assets, income, and everything that you provided, that they're still the same. And that's when they actually give you the loan approval, so the money can be, it's ready to to pay for the property. Very important on here again, purchase homeowners insurance. Like what was mentioned before, the bank or whoever you're getting a loan from wants to make sure that the property or the asset is insured if there's any issues that come up, any claims, fire, flooding, damage to the property. So even though you're paying that and you get the keys, the bank still owes the property until you satisfy that debt. So they want to make sure that their asset is covered. 10, you will obviously close on the deal, receive your keys, and move in. So that's kind of the short part of the process of home buying. So it is more a little bit detailed. It does take a little bit more, but for the purpose of our conversation and our meeting here in 15 minutes, that's the way we have to do it. You know what I mean? All right, so we'll go to slide number 3. So in the importance of home ownership, that it makes your income more stable. Housing costs are more stable. Stay right there, so good. All right. So your stable housing costs as opposed to with renting, which I have on another slide. So I'll kind of move back and forth within the slides. But with renting, your rent can increase every year. And some people will say, well, the landlord can only increase my rent 5%, 10%, or $50. Actually, in the state of Florida, a landlord can increase your rent any amount they want every year. If it's not written in the contract and you're paying $2,000 right now for rent, and the landlord come and your lease is up, he can say, look, I want you to pay $4,000 next year. A lot of people think it's only 5%, it's on a sliding scale. That's actually not the case. So as far as home ownership goes, you have stable housing costs. The only thing that increases when you own a home is the insurance every year, which normally is a slight increase, and your taxes, which is very minimal, because if you have a property and it's what's called homestead in the state of Florida, the taxes can only increase 3%. You know what I mean? So you do the math. If your taxes is $1,000, 3% is what, $30? Is that how it works? You divide that by 12. So what I'm saying, so literally your taxes would have gone up $3 on your mortgage if you were to do the math like that. So you have stable housing costs. Your asset appreciates in value. So I tell a lot of people that asset appreciating in value, and you're building equity in that. So as opposed to you paying rent every month, that goes to the landlord, your money that you're paying on your mortgage, you're actually paying yourself. So you're reducing the principal on there. So that means you're building equity in the property. And in South Florida's market, your asset is appreciating. So whatever you purchased a property for last year, I guarantee you this year the property has increased by at least 25%. So $200,000 property means it will worth $250 this year. So the quick math is, as we go down to the source of cash, is obviously for most people, the average person, we are not able to save $100,000 in 4 or 5 years. But if you purchase a home, the equity in that, or the equity in that property will increase to that. So the example, what I'm trying to say is, for example, if you purchased a home 5 years ago in this current market for $200,000, that home is probably worth about $350,000 right now. So if you were to sell your property, you'd gain $150,000 plus whatever you paid yourself every month, just like instead of paying a landlord, you're paying down your mortgage. Yeah. You know what I mean? So not only that, but you don't have to sell the property. You can do what's called, I lost my train of thought here, get equity. So you can do, you can get an equity line, a credit line. So you can borrow against your asset. So you can say, now, you know what, my property is worth $350, I buy it for $200, I owe $175 because I've paid on the principal at that time. So you can now get an equity, you can get equity out of your property or a credit line from your property and now borrow $175,000 if you choose so, or any amount in between that. So now you can open up your own business. So we tie back it into entrepreneurship. You can now own your own business. You can now open up your own business. You have more sources. If your choice or opportunity is, you know what, I want to send my kid to college, I don't want him to take out student loans, or you can do that. Or you want to use your opportunity, the money, to go on vacation and live life that way, or open up a business. So there's many opportunities that your home can afford you, as opposed to you renting. You know what I mean? Tax advantages, the interest that you pay, you can write that off at the end of the year. If there's any repairs to your property, when you file your taxes, you can write that off. It helps build your credit, obviously, because you pay on time, so that increases your credit score, and freedom to personalize, as opposed to having rental property. You can't do certain things as you have to ask the landlord.
Only one question.
Yeah.
You write off taxes on your house, like whatever you spend.
Yeah.
On your house. You have talked to your tax agent about that.
Yeah. So when you're filing your taxes, you would you let them know so if you make improvements on your home, it's a dollar value. You can talk to your tax person and let them know you can write that off. There's also taxes that you can write off. There's also what's called depreciation costs on your property. So your tax person, I know the headers, but your tax person would be able to explain that in more detail. So there's so even though your asset is increasing in value, so it went up $150,000 in 5 years, so now it's worth $350. But the asset itself is depreciating, even though it might not make sense to say the asset is depreciation, but it's also creating value. So
it's not the property itself that depreciates. It's the amount of money that they use against taxes that gets depreciated each year.
So not the asset itself, but you can write off. So every year you would say, okay, the property is worth $300, so you depreciate it by 10% or so on, so you can write that off on your taxes. But the tax person would be able to explain that in more detail. Is what I'm saying?
All right.
But yeah. So slide number 4, the importance of owning property. So alright, so I kind of touched on some of the things, jump ahead. So there's no limit to how much a landlord can raise your rent. In the last year, rent has increased 37%. That's Palm Beach. In Miami, it's 39%. In Fort Lauderdale, it's 39%. In Tampa, it's 32%. In Orlando, it's 30-something%. So you don't say, well, I'm gonna live in Miami, I'm gonna Fort Lauderdale, Orlando, Tampa, it's the same thing in those places. It's 30-something%. So if you do the math on that, you see that it's significant. So, and again, the landlord, there's no limit to how much a landlord can raise your rent. You see what I'm saying? In Florida. The latest stats from this company here, and plus many other companies, if you do the research, there is an average of about 850 people move to Florida every single day. See what I'm saying?
Or was it per week? I think I heard it.
No, man, it's a day. That's what them say. It's not a week, it's a day. That's just how much people move in here. So when people say the market's gonna crash, it might not crash, In my words, I use a correction. There might be some correction to the market, but when you have 1,000 people moving here, how much is the market gonna really go down? You see what I'm saying?
Yeah, because I had the conversation the other day, I said like, why so much apartment? Because where we going to see so much apartment
Being built.
Yeah,
Being built. It's because there's so many people moving here. So maybe not in just Miami, but the state of Florida, there's 1,000 people moving here a day. And if you look up many other websites, they'll tell you, this is just one that I picked, but they'll tell you that. So I looked across several websites and that's the number. You know what I mean? So Florida, and so that's one of the reasons. The next reason here, Florida created almost 500,000 jobs last year. Increased by 5.6 over the year, growing faster than the national average. So in compared to most other states, we have more job opportunities down here than a lot of people don't realize that or think that. So our economy down here is growing faster than the average. Unemployment rate is less here than the national average. You know what I mean?
Just on that subject, just to piggyback on what Aggie's saying, with the populations, 2 weekends ago, I went to Fort Pierce. Before I went to Fort Pierce, we have in mind to open an office over there. The populations in Fort Pierce and Port St. Lucie between 2019 and 2021 double.
Yeah. So that's what I'm trying to say. So a lot of people, it's like everybody's moving to Miami, Fort Lauderdale, Palm Beach. That's not the case. All these other places.
Yeah.
The #1 spot for people moving right now is Tampa. It's not Miami, Palm Beach, or it's Tampa.
And somebody get out there because I was in Lehigh, Fort Myers.
Yeah.
Tampa and Jacksonville.
And in that 3 months, it's just like the whole place just started develop like crazy.
In Lehigh Acres, right?
Yeah, Lehigh Acres. And I heard that was one of the fastest.
It's one of the fastest growing as well.
Yeah.
But Tampa is the spot. Jacksonville is the biggest county in the state of in Florida. So there's a lot of there's a lot of land up here, and there's a lot of people moving those places as well. All right. So just wanted to run down with the importance of owning again. So this is the average. So a studio, $950. A 1-bedroom, I can tell you, this is what I got from the site. But I can tell you that being in real estate, I can't find no one a 1-bedroom for $1,100.
No.
The cheapest 1-bedroom is $1,300. I'm gonna tell you that this number is wrong. I can't find no one unless that person is renting it themselves and they say, boy, I have a little efficiency attached to the house and they want to rent it for less. But if you are going out there to look on the massive of what's being rented, you can't get a 1-bedroom from under $1,300.
2 years ago.
Yeah.
$1,135.
You know what I'm saying? But this is going based on their fair market value. But it's not correct. You see what I'm saying? The same thing here. I can't find a 2-bedroom for somebody to rent for less than $1,700. And I'm not talking a house, I'm talking an apartment.
Yeah, like I'm finding up to like 2,300 2-bedroom. Like,
yeah, exactly. So that's what I'm saying. So these numbers are off. The cheapest you can get a 2-bedroom rent for 17 or 18. And if you get anything for less than that, you say thank you. You know what I mean? And keep it moving and don't say no. Alright, to rent you need 3 times whatever the monthly rent is to move in. So if we were going by their average $6,300, but we know it's much higher than that. The cost of renting at that amount for the year is $25,000. Some people don't look at the number like that. That's $25,000 you pay somebody else to pay their mortgage and profit off of you, as opposed to you banking your own $25,000 on your own house. You know what I mean? Alright, again, just some more stats here for you. Florida, and that's the mean, so that's not necessarily what it is, but it's higher. That's how much home values have increased in the last year. And on some other, that's actually a moderate number. I've seen where other statistics have said it's 30-something%, the increase in value. So $100,000 house mean it would have been worth 123, or $200,000 house mean it worth 260, 250. You know what I mean? So that, and if you look, it says 69% in the last 5 years if you own a property. So a lot of people are saying there's going to be a correction every single day. North Carolina is more expensive than Florida. Boston more expensive. Washington, Maryland, New York, California. See what I'm saying? There's parts of Colorado. People don't think like, Colorado, Utah are expensive. Phoenix, the Sun Belt. Sun Belt is Phoenix, Texas, and those places. Phoenix, those places that have sun like us are more expensive than Florida. You know what I'm saying? So a lot of people is like, well, it's going to cool off. All those places, their housing prices is double what it is in Florida. So somebody can sell their house there and come buy a $500,000 house here and still $500,000 in the bank account. It's still cheap for them. You know what I'm saying? So it's still, for us who are living here, we've seen the increase in value. We're like, wow, it's expensive because we've been here for 10 years. I remember when it was $150. But in comparison to a lot of the other big cities, Florida is still one of the cheapest to live in when you when you compare apples to apples.
That's why you just said 1,000 people moving in a day.
Exactly, because all those places, New Jersey, they can sell their flat for millions of dollars.
Yeah, because my in-laws they lived in New York, and most of them live in Ocala, Port St. Lucie, and like I said, it's like half of what they pay in New York.
Exactly.
It's much bigger space.
And you get in and better temperature.
Yeah.
The main factors that cause the fall in house prices involve these things here. So interest rates increasing, that might cause what you call a correction in the market. So rising interest rates, mortgage payments will become more expensive, economic recession, high employment, reducing demand, causing home repossessions. There's none of that happening right now. So some people might say, well, interest rates went up 0.5 point from 2.8% to 3.5%. That's no increase. If you check what interest rates were 6 years ago, interest rates was much higher than that. We got to re-up. So interest, you see what I'm saying? 10 years ago, interest rates was
Zoom in.
Oh, that's what I was asking. 10 years ago, interest rates was 6.5%.
6?
Yeah. In
10 years?
10 years. That's what I'm saying.
Wow. Yeah,
So when people say, oh, interest rate is gonna be 4%, the market's gonna crash. No. Well, the last house me by 5 years ago, I got my interest rate was 4.25%. In 6 years ago. So I'm saying, so interest rates is not that back to what it was 6 years ago yet.
Yeah.
So an interest rate at 3.5% is still low. So even if and they have determined that the analysts have determined that interest rates will probably reach about 4.5% or 5% by next summer. That's still low, because remember, for a bank to make money, according to them, on interest. On their money, interest rates has to be more than 4%. So at 4%, they're lending below the value. You see what I'm saying? So that's the reasoning.
So the value gone up with interest. That's what catch to interest.
Yeah. What boosted the buying process in the market for homes is because interest rates were historically low at less than 3%. According to economists, for the bank to make money, am I on or no?
Yeah, sure.
Interest rates have to be at 4%. So they're going to increase the interest rates to somewhere about 5% because they're saying that there's too much cash in the economy. So when interest rates go above 4% to 5%, now the bank can then turn around and say, you know what, we can offer you a CD for 3%. You want to put your money back? So that's the thing. So then people invest more in the bank and in other facets. So a lot of people now are holding their cash because cash is king. Your cash is more valuable now than it is in the bank. So that's why there's an explosion of people buying cars. They're just out there buying. People are buying jewelry, cars, houses. So now in order to reduce that, which is inflation, you know what I mean? They have to increase the interest rate.
So the Feds increasing the
Yeah, so they're increasing it rapidly. Remember no one know. Yeah. So that's what they're doing. You see what I'm saying? So to reduce the flow of cash out there and to put it back in the bank. So cash is being used so freely right now. Because it don't make sense when interest rate is at 3% because the bank only gain you 0.25%. What's the purpose of that?
Yeah.
Then I find something else and do with it. You know, I can do this and I end up get a 5,000. That's more than what the bank is gonna give me. But when now the bank rate increases, now you might say, you know what, they're giving me a 12,000 a CD for 12 months. I can get it compounded, or they have some other type of secure financial investments for me. But it's harder for the bank to do that with the interest rate so low. All right. So there will, so will there be a correction in 2022? Most financial analysts say no. There's no correction coming soon as far as home prices reducing. But there, you see what I'm saying? There's not going to be a reduction in home prices, but further away up, I'm gone. I'm gonna slide that. Yeah. All right. I don't. Again, them still see my slider or no?
Them see a slide, but yeah.
Yeah, it's the importance of home ownership. Yeah.
Alright, so the last slide here is
That didn't move.
No.
It's the same slide.
Same slide. Okay. So
No, you.
Frozen.
It's frozen. Alright. So no worries. Yeah. Alright, so no, it's just one piece of I say is that so the correction what they're saying is that with the increase in interest rates, that instead of the housing market prices going up 25% and 35%, so the increase in interest rates and things like that and inflation, you will go back to a typical market where where the home price increases between 3 to 5%. You know what I'm saying? So you won't see the drastic measure where, you know what, in 2 years your property value double, but now it will take 5 or 10 years. So there'll not be a reduction because, again, so many people are moving to Florida. So the demand is there for the property, and Florida is so wide and so long. You know what I mean?
Yeah. So, really, in terms of buying, when is the best time to buy? Why you said no?
Well, there's no. So the best time to buy was 5 and 10 years ago, when there was a when there was a recession in 2009, 10, 11, and 12.
So about last year.
So last year was good to buy because a lot of people didn't buy last year and the year before because they were like, properties are increasing at 20 to 25%. Why buy now? But if you bought in 2020 and you look like what you were, and you looked at your property right now, your property increased almost by $75,000 if you're in Miami, Broward, Palm Beach, Port St. Lucie, all those years.
Become a shop last year and then we get a good interest rate. And then everything just gone.
And then everything gone back up. So last year was, if you bought, that's what I'm saying. So
last year.
And last year's a good time to buy. A better time to buy was 10 years, but it's still good to buy even now because people are saying they're saying, well, there's going to be a crash. I don't think so. I think there might be a correction where now instead of your value increasing by 25%, the market can't sustain that forever. 25% increase every year. So it will be a reduction now where your property still increases, but it increases with the rate of inflation or something similar to that, where your properties are increasing in value by 5%. You know what I mean? Instead of the 25. So it's always a good time to buy. If you can afford it and have the means, property is always good to buy. Not because I'm a salesman, but it is. Yeah, I live by what I say. I buy property. If I have the means and the opportunity, I buy. Yeah. See what I'm saying? So it's not just a sales pitch. It's always good because you have to live somewhere. Yeah. Either you're going to rent and make somebody else rich, or you invest in your own self and your own property, and you pay your own self. Is what it is.
Dean, one question. In terms of how you approach. How is your approach different for buying to dwell, for your main dwelling, or buying to invest, like an investment property?
So what was the difference?
Yeah.
Alright, so obviously, depending on what city or what county you're in or the case, So the investment amount that you need to put down might be a little bit more, but there's still programs out there. So as an investor, you can still buy a home with 5% down. You see what I'm saying? There are programs out there that a lender can say to you, okay, so if you're buying it for investment, you can then present to them what the market value is of the investment, meaning what the rent you're going to get. So if you can say, all right, I'm buying this property for X amount of dollars, I'm buying it for $200,000. The mortgage on this $200,000 property is going to be $1,500, but I can show that the rent around here is $2,500. They will take that rent in consideration and not use it will be, again, they will use it for you positive. So meaning, so you're on a fixed income.
Equity position.
Exactly. So you're on a fixed income, right? So the money that you're making right now can only pay the mortgage for your house. So you don't have enough income to say, I want to buy a property to provide and pay for 2 houses. But the bank will then take the future, what you're going to make on it, and use it as your income now. So that's how you use it. So you want to make sure that the bank that you're going with has that program in there.
Don't so they require you to have a certain amount of monthly rent covered, a monthly mortgage covered before you can take that approach?
On your house?
On the investment?
No.
Not if you're on equity position.
No, not necessarily.
If you're on, I'm sorry, I don't mean to. If you're on equity position, that's what they're looking for. They're looking for, if they were to foreclose on that property, is the money I guarantee.
Yes.
That's what puts you on the better positions when you're on the equity positions. Anytime you're on the equity positions, the bank will jump on most loan.
Because they can make money on it.
Exactly, they do a lot. So you can't buy it for 3%. So they're going to require you to put a minimum of 5% down, right? So 95% to loan value. But then you are going to provide them with a documentation that say, you know what, the neighbor next door, I went and I Googled and it said the rent in this area is X amount of dollars. So you have proof there by resources of that, or you get you're able to find out what the other properties in the community are rented for. So you can go back with the realtor, you can see what the other properties were listed for rent.
The market analysis.
The market analysis, exactly, a CMA. All right, so you do a comparative market analysis. So that now, like what you're saying, Peter. So now you don't have money to support 2 households, but you can show the future income of the monthly rent every month is going to take care of that property, plus you're going to have 25% left over. That's how they do it. It's a 75%. Exactly what for the term he used.
Just to answer his question, which is, he's talking about fact here. I purchased a duplex a year ago to the pandemic. That's exactly what I use. I use a market analysis to show the area that I purchased the duplex, how much they were renting now, and how much, especially in Florida, rent are increasing, how much I'm going to rent the duplex.
That's all you got to show. So you don't have to qualify for 2 mortgages. You have to show, all right, this property this is an income producing property. It will produce X amount of dollars for me, which is going to cover your mortgage. I'm going to put 5 or 10% down on my savings. So you have that cushion just in case the property goes belly up right away or something happens. You know what I mean? But that's what that 5 or 10% cushion is that you're giving the bank as far as your money. But then now you have the future funds of the equity or the rent that's coming in to show that that's going to take care of the mortgage there, plus you have a 25% cushion. So that's what they want you to for the rent to be 25% more than what the mortgage is for them to fully invest in. All right,
and I think I went over my time. On the same note, when it comes to tax purposes, when it comes to tax purchase, that's not going to hurt you because you're able to clear that to tax purchase. You have an income property, so you clear that. So you can do, when you file your taxes, you can do the individual taxes, and you also do a Schedule C to show that income property, how much you're drawing, all the expense that you do on that income property, so you can write all this off, so it doesn't hurt you.
Yeah, the income that you make from it, like you said, well, it won't impact you significantly on your taxes.
On your taxes.
Alright.
Thank you very much.
Thank you, Dean.
Yeah, well said, boss.
Right.
Safe to say that was a great presentation and very informational. So with that said, the last thing that is on our agenda is information technology and how we're going to integrate that with our new found financial knowledge, right? And so we brought in the information technology guru, all right, to talk about how we can do so. So without further ado, Peter Shan.
You probably have to since it land there right now. For 8 for 15 or 20, you know.
But they get it cheap.
Yeah.
We don't have a place up there, place are in top, but we not really have.
Yeah. But even the land. You can get the land and
the cheap, my brother said $5,000 first time,
right?
Then it got up to 15 something.
Last year land at Leah acres was 5,000 to 6,000. This year at 20,000.
Yeah, all of them, I'm saying $5,000.
Yeah, all of them are 20,000 right now. Yeah.
But you may rent, I'm not really do nothing. I rent, I'm not really write off my taxes, you're not do nothing. Because just in a couple months now. I don't really know, we need to get to see how we can get the part together.
We had to rent it?
Yeah, they rent already. But we just a colleague and nothing at all, not really.
Alright, so when you buy it?
Last year, June.
Oh, okay.
New property, new.
Yeah, I mean, you claim it by your taxes.
No, we're not claiming it by the taxes.
Only if you want the income for do something, then you claim it. Because if you don't claim it, you can't use the income.
Yeah. But more use it, you know, but as I know that, I have to go.
So what you have to do now? Because you're not going to file a business. Yeah. You're not going to file a business account to do it.
Alright.
Claim the taxes for we can't explain it, but you can aim the expert on it.
Alright, good evening everybody. So we had some great presentation before. Dealing with credit, dealing with entrepreneurship, and dealing with real estate. So my goal is just to add to that, or provide the tools that would help you to use these lessons that we've learned from Jennifer, from Fedora, and from Dean. Really. Right? So I'm going to talk about information technology. I have a strong background in information technology. I work for Microsoft. And my goal is just to try and help you with some tools that can help you to achieve your financial goals. Alright? So let's talk about key financial goals. Alright? Number 1, cash flow. If there's some way that you can earn additional income legally, that can never hurt. Right? Many of us have our day jobs, many of us have our side roasts and stuff like that. Any more additional income you can bring into your household can never hurt, right? Then reduce and eliminate debt, right? As much as possible, if you can pay off something, then pay it off quickly. As Fedora's video demonstrated, if you can pay it off in 1 year, you can afford to, then pay it off in 1 year, instead of paying more and waiting to finish it up in 2 years, right? Proper protection, we talked about insurance. Insurance is absolutely critical. If something were to happen to any one of us as sort of main breadwinners in our home, then we have to have something in place to be able to protect and to take care of our children and our families and so on and so forth. Right? There are suggestions in terms of emergency funds. Sometimes it's really difficult, but you have to understand your income and your household budget to be able to prepare an emergency fund. It's supposed to be 6 months or more. So whatever you need to live for 6 months, if you lost your job or if you couldn't work, so this phone is just turn on. If you lost your job and you couldn't work, if you needed to go into your savings or something like that to be able to survive, then you should be able to have 6 months of money put away to be able to go through that period, right? Now, separate up and apart from your investments and other things that you're preparing for when you retire and for your children and college and stuff like that, that is just an emergency. Seems like a hard thing to achieve, but as much as possible, you know, build it up 1 month, build it up 2 months and so on until you get to the point where you're 6 months, and then you can, you know, any additional, then you can invest in other things. Accumulate assets. You know, Dean talked about real estate, own things. It might be
the PowerPoint section.
Stop when stop again. Let's go in.
I get back. My item. About 6 months.
Alright, so accumulating assets, whether it's an additional property or you have things like stocks and other investment instruments that you can use to prepare yourself for the future, to hold value for a period of time to help you to go through difficult periods. Alright? When interest rates go up and down, different financial instruments perform differently. And if you can have somebody that can help you to sort of manage these assets, you get the best results in the long run. Estate preservation. You know, we're here because of our families, our children, and all of these things. Whatever you can do to be able to give them something when you leave. I remember Jennifer mentioning something about white people having inheritances and stuff like that. We should strive to achieve that as well. You know, when we leave, when we finish that journey, our children should have something to push them from us, right? You know, it might be a house that they can sell, it might be some money, or it might be some stocks that held some value or something like that, or even some jewelry that that can be used to, one, you know, not to sound, you know, sort of morbid, but to bury it, and then to help themselves to move forward and provide something else for their children and your grandchildren and so on. So let's talk about technology now. You know, everybody here has their phones, and for the most part, can't function for a long period without at least taking a glance at their phones, right? So technology is a key part of how we function in today's society. And it provides tools that you can use to be able to manage your finances. All right? So let's talk about 10 steps. 10 steps within that you can take with specifically your phones, maybe online with your laptops and so on, that can help you to manage your finances better. 1, automate tasks, right? If you have money coming in, a paycheck or whatever, and you have certain bills, if you can automate the payment of those bills, then it's going to help you to avoid things like, you know, non-payment fees and penalties and so on and so forth. And it means it takes something off your brain. You know, you don't have to remember that anymore because it's automated. Then reminders. You know, if you don't necessarily want to pay the thing automatically, at least set a reminder on your phone for you to take a look, right? The other thing that's important is not necessarily just paying a bill. It's taking a look at your balance to make sure that you know what is in there, right? One of the things that you have to avoid is things like fraud, things like people taking over your accounts and stealing your identity. If you're not monitoring your balances and your assets, then, you know, those things are more likely to happen. So remind yourself, you know, whether it's every day, every week, check my balances, seeing what's going on to ensure that you have a good understanding of what's going on in your finances. Managing your finances wherever you are, number 3. A lot of the banks, actually, no, not a lot of, all banks now, for the most part, have some sort of online or app that you can use to manage your finances, right? So you can take that wherever you go, you have your phone. So at any given time, you can check on what's going on with your finances and transact business, especially if you're an entrepreneur and you're running business and you're driving around. I think Dean was talking about his experiences in real estate where he had to be driving around for his clients and so on and so forth. But he can still transact business while he's on the road and doing those things. So being connected is very, very important. Number 4. This really should be number 1, but I wanted to tackle it here. Create an accurate budget. I struggle with this personally. You know, understanding what is happening with your finances and within your household as it relates to your money, right? How much money do I spend? You know, what are the bills that I'm going to be responsible for this month? What are the bills that I may be responsible for monthly, but what are the ones that may come up quarterly or every 6 months? You know, maybe it's insurance, stuff like that. If you have an accurate budget, you know exactly what's coming in for the most part, and you know exactly what's coming out. And if you don't know that, then you can't invest, right? It's difficult for you to make the type of decisions that you need to make unless you fully understand what's going on with your finances, right? So it might sound daunting, it might sound difficult, but there are tools that are available. You know, some of the banks in their online platform, they already have your money. They already see that the money that's coming out for your bills and so on. So they have tools within those online platforms that you can add in, you know, maybe, you know, some information from your other accounts or information from your insurance and so on. And it provides you with an overall picture of where you are. And take a look at it. Talk to your wives and your children about your finances, where you are, what your plans are, and then how this budget is going to affect those. How I'm going to manipulate that budget to be able to meet those financial objectives, right? Number 5, compare prices. It might seem like a simple thing, but why pay more for something that you can pay less for, right? The same situation with Fedor and the stove. One young lady is paying, you know, $500 less or $400 less for the same stove. Compare the pricing. It doesn't necessarily have to be a big purchase. It could be small purchases. Maybe one supermarket here is more expensive generally than another one. So if you spend, instead of going here and spending, you know, $50 per week or every 2 weeks for one whole year here, you could save that money. That's $50 every month or every 2 weeks less that you're spending. That could go into some sort of investment or something to put up for later on. Okay, paperless. I know all of us have experienced this where we're looking for a financial document inside the house and tear up the house to try and find it, right?
Yeah.
So the technology can help you to reduce the likelihood of you having to do that, right? You can use your phone now and you can scan your receipts, you can use your phone to scan your bills, and you can store them somewhere, you know, any sort of documents to make sure that you can find them when you need them, right? It's easy to search a computer to find things, right? It's much more difficult to search a drawer that have, you know, 10,000 other papers in it to find something that you really need. The thing that you have to remember, and you know, my colleague Chris, that's also in technology, would remind us is that if you have important documents stored in the cloud or somewhere, make sure that you have a backup, or if you have it stored on your laptop, make sure that it's backed up somewhere safe and secure, so that if something happens to this computer, it crashes or whatever, you have a backup somewhere where you can recover and retrieve those documents. All right. Number 7, track your investments. You know, we talked about real estate, we talked about entrepreneurship, we talked about credit. We didn't talk very much about investments. However, in terms of growth or growth of wealth, you know, real estate is one way where, you know, the value, the increase in value of your house can increase your overall wealth, right? You can gain that equity. The other point that Dean made was that if you put money in the bank, it's a waste of time for the most part. You're getting less than 1%, you know, 1/4% in terms of interest. if you look over time, stuff like the stock market on average will perform like 15% or thereabouts per year, right? You have ups and downs and you have dips and so on. So you have strategies that allow you to not lose a lot of money and so on. And you have, you was talking a couple of years about some instruments that you can use to be able to protect your money while getting the most benefits. So if you can invest and you make a 7% on your money with limited risk, it's better than sitting in the bank and earning 1/4%, right? So technology allows you to be able to take advantage of those things. You can see what's happening. You can make decisions real time, and then you can compare it with your overall budget to determine where you are, where you want to reach in the next 5, 10, 15 years or when you retire. Number 8, avoiding financial mistakes, right? Don't click on everything. You know that, right? When you get those texts, just avoid it. And if you don't know who it's from, you avoid it, right? But the additional thing what I can help you to avoid mistakes is to inform yourself, to do the research. Dean did a lot of research, as well as Fedor, as well as Jennifer, to present for us. You see, the internet is a source of information. Some of it is incorrect, but that is where you use the information that you find, and then the experts and the professionals that you know, like Dean, like Fedor, like Jennifer, to be able to help you to make the right decision. Number 9, recording your receipts and gathering, and number 10, gathering coupons. I want to finish up quickly. It's just more about storing that information, saving money as best as possible, using those sort of digital tools to be able to help you to save, to grow your wealth, and to be able to manage your finances better. And then lastly, this is just to help you to remember. We've talked about credit and how important it is in the USA. So you can use this little acronym USA to help you to remember what you can do with finances. You use financial apps and online stores or whatever it might be, or online services from your bank. Use them. Make sure you go into it, get familiar with it, and start to use them. S, seek information. Every decision that you're going to make, look for it, search, look for examples and look for ways to help you to make the right decision. And then, in addition, you can reach out to professionals like Fedor and Jennifer and Dee. And then the last one, automate, right? If a computer can do it for you, why do it yourself, right? They don't get tired, they don't forget. So if you can automate things, bill payments, reminders, stuff like that, then just use it, okay? And then that is it. So, yeah.
Thank you, sir. Thank you very much, Peter. And so as we conclude this this chapter of the financial literacy program, I just want to add a couple of things. You guys may not know this about me, but among the other outside world, I'm also an insurance agent. I don't think that you knew that. I don't know if you knew that or not yet, but insurance packages, I just want to add that insurance packages can also be investment packages too. There are several types of investment insurance that has a savings account package. That it's not a standard saving account that gives you a 0.5% interest rate. It actually gives you a much higher interest rate. There are several packages like that, and I'm sure Jennifer can talk to you about that. I'm not a practicing insurance agent, but I can tell you that there are many investment packages. There are annuity packages that also fall under the same banner that can help you grow your money. Traditional banks, savings account, do not make money. What the bank is doing is actually making money from you by promising you security. But there's so much other things that you can do with your money that is also secured, as well as grow you better interest, because the bank is getting rich off of you. It's important to have a savings account, it's important to have a checking account. But doesn't mean that's the only source of where your money should be. I keep talking to the men about these different online stock market accounts. So there's two that come to mind real quick. Peter, you and I, we dabble in Robinhood, where it's a more risk-taking type of account. You buy into small, penny stocks or dollar stocks, and you hope it. We buy a couple of stocks the other day. Peter introduced me to a stock that went from $10 one week when Peter bought it, and in a week it was up $84. We buy some stock. I made $1,000 in one day. That was just a smart investment.
You keep the thing a secret.
What? You want me to share only one person?
I think you'd have COVID.
Yeah.
No, I never had COVID.
Yeah, but that being said, there's an app I also introduce everybody to, which is called Acorns. Right? You don't personally pick the stocks in Acorns. There's an algorithm that they use which prevent you from ever losing a penny. Because what they do, they spread out your money across so many different factions.
Right.
So if you invest $1, they take that dollar and they split it up into 1,000,000 particles and they invest it everywhere. So it's unlikely, almost impossible, that every stock that you're investing, that's going to be going down at the same time. All right, and it's so many different marketing, from currency to technology to all the different type of things that you can invest in, that they spread it across, and it prevents you from losing anything. I've been in Acorns for over 17 years. Gary tell you that I introduced him to Acorns, he invest in Acorns, and the last time he checked, he couldn't, because Acorns use spear change. I can explain.
It's not a spear change for the...
It's spear change. Yeah, so basically, you can use spear change, but it has multiple way of investment. You can put money in one time, you can have them recurring payment that come out of your account, or you can just go spear change. And the spear change is the one that most people like, is because what it is, it's attached to your debit card or a credit card, whichever you want it to be. Every time you go to the store, if you spend $9.95, you take the 5 cents that remains after that, would make a $10, a whole dollar, and it invest it into the stock market. Half the time we get change back from people, we don't even know where that change go. That change is somewhere in your car, somewhere, and it's not earning anything. Acorn actually take that change and invest it for you, something that you otherwise wouldn't know about. I can't tell you how many vacations I take just on Acorn's investment. So it's a really good program. It's a safe investment, Acorns. But Robinhood is a risk-taking, and then there's multiple platforms for online investment, but I suggest using both of them. One, the secure type, and two, the risk type. The more risk you take, the better the chance of you making money. The lower the chances, more secure, but but a slow growth as well. So invest your money, guys. Don't put all your money in the bank. It's important that you invest your money. But with that said, guys, we're gonna wrap this up. And
one thing before you wrap it up.
Yeah.
What Peter said is a budget.
Yeah.
Seriously, the man should do a budget. Because I teach a real estate course once a month, right?
Yeah.
For first-time home buyers, and in that class there's a budget. People do a budget, and then after they do the budget, they can't realize. They don't realize actually how much money they're spending.
Yeah.
People are like, wow, and I'm like, after they do the budget, and they're like, I do a budget before I do my expenses and so forth, and they don't realize that, I spend $300 a month on fast food for my kids.
Yeah.
People will say, I don't eat fast food, but they don't realize that they spend $300 a month at McDonald's. When they do the budget, they're like, wow. They're surprised at their own self that they spend $300 and they don't eat a lick of fast food, but they buy it for the youth then. You see what I'm saying? So that's very important, that you do an accurate budget. Whatever it is, if it's high grade you buy, whatever it is, do the budget. And there's an app.
There's an app for that.
Free app.
There's an app.
I'm scared for you right now.
No,
I'm scared.
no, man, you should do it because, again, it's the truth you are you're facing the truth for yourself, you know. You don't have to show it to nobody else, you know. Pal. You just show it for yourself and you realize that, yo, I can't believe I'm filtering $600 for this. You wouldn't believe it.
True bill. True bill. Not only does it help you with all the money you spend, because it basically tracks your debit spending and your credit spending. Whatever you put in there, it's going to track those things. But it also shows you all these additional internet apps that you have on your phone that you're spending money on, that you don't even know that you're spending money on.
Because again, a lot of, like Peter said,
on your phone, but it will tell you.
Auto pay is good, you know, but a lot of times you forget that you have this auto pay thing that you're not even using. And then you say, oh snap,
money's coming out on it, and you don't even realize. I'm paying for this thing, I'm not even using it.
Just to piggyback on what Lee said a little while ago, and Peter touched on it, but we don't pay attention to it because Lee told me about the Acorn 2 years ago, prior to the pandemic. And I went home, I talked to my wife about it. Because my wife works at home, she's literally on the internet 24/7. And I told her about it, and I said, honey, hey, this is what he shared with me. And she go in, and she said, okay, this is what I'm gonna do. I'm gonna lock it or debit card to it, so everything's go to it. I don't need to say anything else. So there are informations within the organization that we can share to benefit ourselves. We have come a long way. If today that we have this conference for us to share some information that can value ourselves, that can value among us, that perhaps we have the information, we are not using it. You know, the information is next to us.
There's a lot of talent in our group.
Out of sight, out of mind. Because we on this group, we have over 40 members signed. I'm sure every one of us on a different field of a professionalism that we are not using among us.
Right.
And the Spanish people, whatever people that you want to talk about, that's what they do. That's how they grow.
And Chinese.
Well, Chinese, forget about it. They like that. Forget about the Chinese, the Jewish people.
Yeah.
I learned from the Jewish people.
Yeah.
You know, we don't take for granted, like Lee said, we go to the store, we spend $9.90, they give us 10 cents, or we charge it on our card, we don't pay attention to it. It's 10 cents. Trust me. The Jewish people found a penny on the floor, they picked it up. They told you that's a penny more they had before, just to evaluate. One other thing that Peter touched on, we don't, the state preservations, we were not, they didn't teach us.
They didn't teach us that, that's true.
How to manage wealth, how to build wealth, how to pass on wealth. All family didn't teach us, but we are living in a time where now we are educated enough, we know that information is up to us to pass it on to all next generations, or kids, you know, because I don't like to use the term, oh, white people. No, it's us to do well for ourselves.
Yeah.
I'm not gonna wait for somebody to hand me something and for me to say, oh yeah, the white people do this, the white people. No. The opportunity is here for us. It's us to take the opportunity and run with it.
Yeah, it's important to remember that for our children, we don't make them start over from scratch again.
That's correct. Yeah. That is correct.
Even a little bit more.
That is correct.
Even a little bit more than what we had when we were starting out.
Even not having to pay an exorbitant college
student debt.
Well, trust me,
if we can save them that debt, so they're starting from zero instead of starting from negative 70,000, like all of us do.
Yeah.